All right, let's dive into a pattern that every single trader needs to have in their toolkit. We're talking about the dark cloud cover. Seriously, if you've ever wished you had a crystal ball to see a market downturn coming, well, this is pretty close. So let's start with a question that's probably on every trader's mind.
It's the big one, right? You're riding an uptrend, everything's looking great, but in the back of your mind, you're thinking, how long can this last? How do you actually spot the red flags before the market decides to turn on you and it's too late? And that's the whole game, isn't it? Enjoying the ride up is one thing, but knowing when to even think about getting off, that's what makes all the difference. The secret? Well, it's learning to listen to what the market is telling you through its own language. Imagine if you had something like a weather forecast, but for the market. A little signal that says, hey, sunny skies for now, but storm clouds might be gathering on the horizon. That's exactly what candlestick patterns are. They're a way for us to visually read the market's mood before it changes. And one of the most critical of these forecasts is a pattern with a name that's, well, pretty hard to forget: dark cloud cover. So let's pull back the curtain on this thing and see what it's really all about. So what is it exactly? Simply put, the dark cloud cover is a two-candle pattern that pops up after a nice uptrend and basically screams, warning. It's a signal that the momentum might be shifting from the buyers to the sellers. Think of it as a huge sign that the bulls are starting to lose their grip. Okay, but here's a super important piece of context. While dark cloud cover is a big deal, it's not actually the strongest bearish signal out there. That honor usually goes to something called a bearish engulfing pattern. And the difference is pretty simple. With dark cloud cover, the second red candle closes deep into the lower half of the first candle. But with a bearish engulfing, it's even more dramatic. The red candle completely swallows the first one. It just shows a much stronger conviction from the sellers. All right, let's get into the nitty-gritty. Let's perform a little autopsy on this pattern so you know exactly what its DNA looks like out in the real world. It all happens in 3 steps. First, you need an existing uptrend, and it ends with a big, strong green candle. The bulls are feeling great. Step 2, the next day opens even higher. It gaps up. The party's still going, right? But then, and this is the key, step 3, the sellers crash the party. They push the price all the way down so that it closes deep inside the bottom half of that first green candle. And this is exactly where the pattern gets its perfect name. The day starts out bright and sunny with that optimistic gap up, but by the close, the dark clouds have completely rolled in, wiping out more than half of the previous day's gains. It tells a really powerful story about a massive shift in psychology, all in just 2 little candles. But hang on. Just like in real life, not all dark clouds mean a hurricane is coming. Some are just passing showers. So we need to know how to figure out if the signal we're seeing is a real threat or just a little bit of noise. So here are 4 things to look for that basically turn up the volume on this signal. First, you want to see long bodies on both candles. That shows a real powerful fight. Second, the higher that second candle gaps up before it tanks, the more powerful the reversal. Third, and this is a big one, if the pattern shows up near a major resistance level, a price ceiling, pay very close attention. And finally, if you see high trading volume on both of those days, that's your confirmation that a lot of people are involved in this change of heart. And please remember this. Context is everything. A dark cloud cover on a little 5-minute chart. It's interesting, I guess, but one on a daily chart, that's a whole different animal. Why? Because it reflects a full day of battle where the bears came out on top. So if you're looking for reliability, always look at the bigger picture on longer time frames. Okay, so you spotted it. It's a strong pattern, it's on a daily chart, it's near resistance, so what's next? Do you sell everything right then and there? No, not yet. The final, and I'd say most important step, is to be patient and wait for confirmation. This right here is the moment of truth. The real confirmation, the sign that the bears have officially taken over, is when the third candle, the one that comes right after the pattern, closes below the low of that very first bullish candle. That's the knockout punch. Waiting for this move can be the one thing that saves you from jumping the gun on a false alarm. So there you have it. You can now spot a dark cloud cover, you know how to tell if it's a strong one, and you know how to wait for confirmation. You've basically added a new weather forecasting tool to your trading arsenal. The only question left is, now that you can spot these warning signs, what are you going to look for next? Because that's how you turn knowledge into real strategy.